you could, guys, could we go to page 185 in the book? That last question there is, who is responsible for contracts in transit? And I think that ought to apply to just about everybody here in this room. And this is a huge issue with a lot of dealers. One of our dealers just had a mutual separation with his general manager because they consistently were running $1.5 million in contracts in transit, which to me is absolutely asinine. How in the world do you have $1.5 million in contracts in transit?
Somebody's not watching it.
Bad process.
Right.
Bad process. Now, who? Go ahead.
Sell 100 cars on Friday.
By Wednesday, you shouldn't have $1 million in contracts in transit.
On when?
Wednesday or Thursday.
Wednesday, you shouldn't have. I mean, I'm asking a question. What if you
might
sell
on
100
Monday.
cars on Friday, 30 cars on Saturday, and now you have, or you know, let's say it's 150 cars on the weekend.
Mm-hmm.
The average price of a contract is $20,000. How much money you have out there?
$2 million.
$2 million. But what Bill is talking about is consistently.
Correct. Not talking about the peaks and valleys. I'm just talking about constant. Who's responsible for seeing the contracts are cashed?
The receptionist. That's what everybody does. She didn't mail it out.
Well, I never heard that answer before. But who's number one responsible for getting the contracts cashed?
Director.
Who?
Finance director.
Finance? General manager? How do you track this?
Or the dealer.
But how do you track it?
You got a 10-day CIT list, or whatever your CIT list is.
10 days?
Well, it depends on how big your store is. My store is a little smaller, so we usually try to do 5. When I work for dealers that did 450, 500. If it was 10 days, it was your ass. You know, you started getting docked. You know, $50 for every day of
Everywhere I've been in the same place too. 10 days have been done.
Yeah, well, sometimes it's.
Who
You
makes
need
your
to follow
list?
that contract down the street and find another job.
Yeah, well, I'm just saying that's just what it was. So.
Go ahead, Greg. What were you saying?
Who makes your list of the contracts?
At the dealership that I worked at before, it was one of the girls in the office, usually the comptroller or her assistant. And now I've got a CIT list in the store that we're at now, and it's we don't do too much business. It's not that hard, but we still do one, and she.
Stop confessing.
Exactly. Well, yeah, exactly. Now she has. Now she's always constantly on me. What's going on with this deal? What's going on with this deal every day? Which is what I wanted her to do.
Sure.
And I have an answer every time she calls me. And sometimes I get caught up in the OSF deals. I totally forget that they're on my desk, or I get caught up and it's like, oh shit, that's 3 days old.
All right. How often should a contract and transit list be reviewed? There we go.
Joe, how long do you review your contract and transit list?
Every day.
Do you get just a list of the contracts, the customer name and contracts? Dollar amount?
Notes, what's holding it up.
Hey, you guys, the list that you have, is it generated on a spreadsheet that somebody prepares for you, or is it generated out of your DMS? What do you think about that, Greg?
Does it look like this? Similar. Do you know how to read it? What's going on? This is what I was going to talk about today, is how to read this, in case you're not getting it. I see in a lot of stores, it's just a single line for each customer name and the amount of the contract, and basically the date of the deal. Is that what you guys mostly seeing, or do you actually get the schedule like this?
Hey guys, get excited about this, because this is really some really good stuff, because there's the difference between getting it funded and getting it funded correctly.
If you'll humor me for 10 minutes, I'm going to show you how to read this thing. And some of you may know everything I'm getting ready to say. It'll be a good refresher, okay? This is a contracts and transit schedule. It's for ABC Motors. It's got accounts 205, 22001, and 215. Account 205 is contracts and transit, 22001 is vehicle receivables, and 315 in this particular store is lien payoffs. So we've got these three columns. Everything in this column is going to be a contract in transit. Everything in this column is going to be a vehicle receivable. Everything in this column is going to be a lien payoff. Okay? Out here are any miscellaneous notes, mostly the customer names. This is for the month ending 12/31/07. It was printed on January the 11th. You would want one that's more real time than this. This is the end of the month one. But same thing. They can print this anytime. Over here is a control number. Different computer vendors do this different ways. This is an ADP system. This control number for this particular schedule is a customer number. Every customer should get one number assigned to them. It should stay consistent across the customers. If this were an inventory schedule, this would be the stock number. If this was a payable schedule, this would be the vendor number. But since we're looking at a receivable schedule, the control number is your customer number. Here's the date of the transaction of this particular line. So on 12/19/07, what we can tell from here is Mr. Fuquavarina came in the store on 12/18/07. He bought a used car. We can tell that because of the source. I've printed in your book, I gave you a list of the common journals. The journals and sources are interchangeable terms, okay? All used car deals at this particular store all retail deals are posted through Source 20. So if I know that, if I see a 20, it's a used car deal retail. If I see a 10, I know it's a retail new car deal. If I see a 12, it's going to be a wholesale deal, okay? So I know that Source 20 is a used car retail deal. This is the bill of sale number. If you went and pulled Mr. Fuquavarina's file, you should see bill of sale number 71779 in his file. If you keep those in a book where they're numerical, you should be able to flip right to that page if you want to look at the actual bill of sale itself. This guy was a cash buyer. How do I know that? Because there's no contract. Okay? We've got a vehicle receivable for $9,760.63 that was posted on that deal from that bill of sale, 71779. I know that on 12/20, 2 days later, Mr. Fuquavarina sent a check in for $9,744.03. How do I know that? Because Source 56 is always cash receipts. Okay? If I see a 56, it means we gave him a receipt. How do I know what receipt number it is? This is the number. That's the receipt number right there. So you should be able to go to the cash board if they keep a board. If it's electronics, you should be able to go to the electronic printouts and go to receipt number 39609, and it better be for $9,744.09, or you got a big problem. Question I've got is, why didn't he write a check for $9,760.53? Don't know. Don't have an answer. But there's $16.50 that he shorted the dealership for some reason. I don't know why. If this was $1,650 he'd shorted it, you'd probably go check it out. If it's $1,650, you may not. Your office manager may not even bother sticking it on the list that you get to see every month.
Great. One question for you. This is a very interesting model, and I appreciate you putting it at $16. And I know if it was 1,000, all alarms would go off. But from your experience, what is the tolerance level in the dealerships? Is it $50 difference? Is it $100 difference? Is it $200? I know it varies, but from good to bad to ugly.
Okay.
What's the tolerance level?
Down here, this customer paid exactly to the penny how much she owed. Why would there be a difference? I mean, it's worth a conversation.
Now, my question to
Tolerance
you...
level is 0.
Yeah.
That's your tolerance level.
Right.
Okay, now I'm pointing something out here because it's very important, because we have special finance directors in here and finance managers, and it's really important to point this out, because what we care about, when I was a salesperson or when I was an F&I manager, all I cared about, is it funded? Yeah, it's funded. I got my money. Okay, well, it's not exactly, well, be happy you got the money. You know, you move on, right? Because you got 400 other deals to fund. And I'm maybe trying to overemphasize this a little bit, but how much money every month or every year on average dealership write off that amount?
Most. I would say most dealerships probably, we've got a hand at the back?
Just to bring up a point, you know what it is? It's the internal, it's the WEO, it didn't get posted, didn't get put in the deal jacket, didn't get through finance. All of a sudden someone said, oh, post that for the deal, and it shows up in your contract and transit schedule, and you need it.
Maybe, but what about the banks shorting us $150 because they charge us an extra $150 fee? Okay, and what about, hold on a second, guys, hold on. What about we are assuming that that's profit? Mm-hmm. We get
It is profit.
It is profit. Well, we're assuming it's profit. If it's not collected, it's what?
It's not profit.
It's a pipe dream, right? So
Right.
that being said, if we're assuming it's profit, now it's monthly, now it's quarterly, now it's yearly. I know of dealerships that have written off $30,000, $50,000 at the end of the year just in bank fees.
Just this kind of stuff.
And the reason behind that is because you are working off a funding list that somebody typed up on a spreadsheet versus looking at it and what the DMS system provides you?
And if you're paying a 20% commission, it didn't cost you 50, it cost you 60, because you paid commissions on that money, most likely.
Say that one more time.
I said, if you're running a 20% commission on the deal, and your office manager is not sharp enough to go back and back this $1,650 out of the profit on the deal, it's really cost you $60,000 over the course of a year. If you're writing off $50,000 worth of this stuff, you got to add 20%
I tell you what it's
to it.
really costing them. I tell you what it's really costing them, because it's not just salespeople commission that you're paying. You're paying managers, you're paying general manager, you're paying F&I manager. It's more towards 30%.
And what are you paying on?
I'm paying on air.
You're paying on air, exactly. It's not, you're paying on money that you don't have.
So we're only talking about $16 on this particular deal. Pick a number. And the point is that something happened. Is this a repetitive problem or a one-time problem? It gives you an indication that there's something to go check out. I know you got 4 million things going on in the course of a day, and it's easy for $16.50 to fall through the cracks. But if you see it one time and never see it again, maybe it's not a big deal. But if you're seeing it every day, there's something wrong. It may be intentional. It may be the F&I guy got the computer vendor to change the reserve rate in the computer, and they're shorting you on every single deal, and he's getting paid on it and knows it. I've seen that happen. So it's just an indication that something happened on this deal, and the fact that it's 2 days later is even more bizarre.
Hey, Bill, what is your rules on short funding contracts, F&I contracts being short funded? What are your rules on that?
How do you mean?
I mean, what's the consequences for an F&I manager to fund a contract that is shorter than he originally billed
Why
it
would
for?
you do that?
An extra fee that got processed, is that what you're saying?
Yeah, I mean, if you're trying to run your business to the exceptions, then that's a terrible business plan. But there's going to be always issues that come up, and I think that's what happens with a lot of people. Is well, we had this, we had Mr. Porter came in here and they didn't have this, so what are we going to do? That happened that time and back in '67.
I can honestly tell you what we did is we drew a line in the sand.
Exactly.
And we said, you're not going to cross this line.
Right.
If the deal gets billed a certain amount, the only person that's going to sign off of that deal to get billed short is me. Actually, 3 people, me, myself, and I. Those are the 3 people that can sign off of that. Other than that, if it comes short, it's coming directly out of your pay. Directly 100% out of your pay. As in, not a percentage of your pay, but directly out of your pay.
I'll give you an example. When I was an F&I manager, I worked for a great dealer, and he sent me to the resource school up in Chicago, and I got back, and we sat down, and he said that if there's ever a mistake in the customer's favor, you'll pay all of it. So what I did, and we were selling about 200 cars a month then, and I was the only F&I manager there, so I was working. But I would do every deal. I would do a tape down, and I'd do a tape up, and I'd clip them both in there, and we never had an issue with that.
The point here is that there is a difference between the deal that got posted and the amount that the customer owed you and the amount you actually got. It was only a couple of day difference. I'm going to keep going through how to read this thing a little bit further. I know that on the next one, I know that Ms. Pockmark came in the store on 12/19 and she bought a used car. How do I know that? Source 20 again. Her customer number is 437402. Her bill of sale number in her file should be 71832. That she had a contract of $18,416. No down payments reflected here, so it must be an incentive or something else. And she had a lien payoff on a trade of $7,325. We know, and that also got posted on the same bill of sale at the same time. On 12/26, you paid off the lien payoff. There's a $3.31 difference. Okay, you had allowed more on the lien payoff than what the actual payoff was. We usually see it the opposite. What are you going to do with the $3.31? Send it back to her? That's what you should do. Some stores write it off. It's such a small difference. If you do and you get caught, and who's going to catch you? The state. States are getting real picky on this. It's technically a sheeted property if you don't send it back to her. It's a legal term. And it means you're supposed to send it to the Secretary of State if you don't send it back to her. That's true in a lot of different areas. I won't digress on that right now. On 12/31/07, you got an EFT. How do I know that? Because
What's the fine on that?
I don't know, Helmy. I don't know.
Do we want to find out?
No, you don't want to find out. The state of California is in court over this, where they've come in and just slammed dealers for hundreds of thousands of dollars of eschewed property. Hundreds of thousands of dollars that they say the state of California should have received on it. I heard an attorney that's litigating this with them speak to our 20 group last summer, and it was impressive. And what they're doing is they're saying if you've got a check that's outstanding that you wind up voiding, you're supposed to send that money to the state too. And they're coming in and they're going through all the outstanding checks. If it's over 6 months old, they want you to give them the money. It may have been a duplicate check. There may have been an accounting mistake, but that's what the states are getting real aggressive on this, so be careful.
Is there a dollar amount cut off on that bill?
Not that I know of.
No.
And I think
An internal policy.
you need to check with the state, okay? Your particular state, every state's different. It's administered at the state level, not on a national level. So I think what you need to do is just check with your Secretary of State's office on what the policy is. Yes, sir.
Getting back to that $16 or $17, this probably happens to a lot of us where you're doing a deal. Of course, the dealer, he wants the deal booked out quick. It's usually something that didn't get charged to the vehicle. RO didn't get posted, something. What suggestion, do you have a suggestion? What is the best way to move that money? Do you charge it to another deal?
No.
No.
No, you don't want to charge to another deal. By the way, this RO thing being posted to another, that has nothing to do with cash posted and cash received. So the RO and stuff going on from the service department, all that has nothing to do with that. We're talking strictly, you said that we're going to get 10 grand, and what we got is $9,590. Or
Right.
what we got is $9,550. And now we're down $450.
Yeah, I think, Frank, here with rare exceptions, every deal's got to stand on its own.
In this particular
If you start
case,
sweeping money from one account into another account against another deal, where do you finally catch up to where you really are, where you're at?
and basically your customer has signed a contract saying he was going to pay you $9,760. Why didn't he?
Right.
It's got nothing to do with the bank. It's got nothing to do with special finance on this one. This is a cash deal.
What do you do to make sure this doesn't happen?
You got to first of all find out what the problem is. Okay, this 1650 alerts you that something happened. And when the guy came in, he said, he may have come in and said, it may be a policy adjustment. Maybe that's what's going on. Okay,
You go after policy to alleviate that?
you'd take it to policy expense, but what happened? Why didn't he get caught while he was
Is
in
it?
there?
I mean, in this particular case, he could have just came with a check that's already written, and he's dyslexic, just reverse numbers, and he said, "Yeah, don't worry about it, Mr. Customer. I don't need that $16." But what we're trying to say is, when it comes to money, there really need to be somebody very, very accountable to it, and I think it needs to start all the way to the top. And when you have that second guy in command that you trust, that you're going to hold him accountable to it, that's fine. Other than that, the money needs to be collected.
Right. And I would submit that if you've got an office manager who's doing a manual heat sheet that you get every day, a manual one, I bet she doesn't put that on there. I bet you never even know about it.
That could be a reimbursement for gas or something like that.
Could a ton of different things, but she's not going to waste your time with it, right? The
Peter-
problem is you can't solve this problem because you don't know it exists.
But Peter, to answer your question, I think what you've got to do is track the deal backwards and find out who found that 1650. Find that 1650 and find out who found it. Okay, why did they find it, and why didn't the other steps in front of that find it? So that's where the problem isn't where it was found. The problem is where it wasn't found. Right. Well, I think you got to go back to the department head. I mean, you got to go back to the F&I manager. Is the guy that let it slip through there? Perhaps. If there's a WEO that he never knew about, the sales manager knew about, and he never told him, then shame on the sales manager. See, that's. Well, I think most stores that run good F&I departments have got a checklist, and everything is done right there on the checklist. And the sales manager signs off on the checklist.
Hey guys, we're
F&I
going to go
manager
through a process that actually makes it very easy for everybody here. Not only easy for you guys to hold everybody accountable, but much easier for everybody to do their job the right way. Because we're not looking to blame people.
No.
We're looking to solve problems. We're not
Right.
looking to crucify people. We're looking to just say, hey, this is the right way to do it. If you do it, I know it's not going to be a problem. By the way, if there is a problem while you're doing this, it's not your fault no more. It's my fault. Since I'm paying you, I want you to do it this way, unless you can come up with a better way.